You're a first-time home buyer and you're not really sure if you want to get a condo or maybe a co-op or maybe a multifamily that has 3 or 4 or even 2 units in it, or maybe a single family property, or maybe a single family that has an apartment inside of it that gives you rental income. Well, you're not sure. That's okay. My name is Hunter. I'm a loan officer. I'm going to describe to you and break down each type of housing type that you can purchase, what rules come with it, make it simple so you can walk out of this video a little smarter than you did before you started watching it. If you did find this information useful, please like, subscribe, and share with other people who are first-time home buyers. So let's dive right into it. Now, to start off, I want to talk about condos and co-ops. The one difference between these that I think you should focus on is that with a co-op, you're essentially buying into it, kind of like you're investing into a business or you're buying stock in something. For example, let's say that you go on Robinhood today and you buy a share of Apple stock. You just bought into that company. Kind of the same way that you operate with a co-op. You still own that piece of property technically, but you're more or less buying into a share of an investment group. Condo is a little bit more straightforward than that, but it can be still difficult to navigate, which is why you want to have someone in your corner who actually knows how to do condos. The minimum down payment for these is typically about 10%. I have seen condos that have 5% down, but most of the time I see them around 10%. And what that means is you're going to either have a full or limited review. What is a full or limited review, you ask? They can take a look at you as a home buyer and say, well, based on everything that you've presented to us, the financials, etc., the personality, and full review, this person's approved to buy this condo. And you don't really find out about that until you actually go into contract. Have I ever had a problem with this? No, but it's always something that you should keep in the back of your head. How do you get out of a full review? You put down typically more than 15 to 20%. That way, it will go into a limited review, meaning they just kind of overlook the file, pass it forward, and they approve it. Simple as that. Now, condos are a little bit trickier because they have to be Fannie or Freddie approved, and we'll go over if they're not. Fannie or Freddie, who are those guys? They're lending institutions that guarantee and insure loans. That's all you have to know about them. When we're talking about condos, if they're approved by Fannie and Freddie, great. It's going to be relatively easy to get the transaction done. But let's say that they're not. Let's say it's a new condo or a new HOA, or even both. It's a new build, new HOA, everything. We have to do a manual review of the condo. Now, your lender or your loan officer that you're working with may have a difficult time doing this because if they're a lender itself, it might be difficult because they only work with a certain warehouse of people underneath their belt. But brokers have a little bit easier time getting this approved because they can see, okay, is this condo approved, Fannie or Freddie or not? Okay, it's not. We'll have to do a manual review. Okay, let's shop it around. Let's see what we can get done. Now, what goes into a manual review? Basically, the lender's going to be looking at, okay, what are their financials? What's their insurance? Do they have a master insurance policy? Do they have renter's insurance? What type of work have they done in the past? What's the builder's expense report? How many units are actually primary residences? How many units are investment properties? How many units are under contracts? How many units are sold? How many units are vacant? There's a lot of different things that the lender does in the background. However, they have to get this information from the HOA, and the HOA is another struggle in itself. The HOA typically is a slowly moving entity that is difficult to deal with. Sorry, I said it, but it's just true. Every time I deal with the condo, the HOA is always really difficult to deal with. So if you are making an offer on a new build or a new HOA, please just make sure with your lender before making an offer that they can get the approval process done up front. That way there's no problems mid-contract and you can just smooth sail right through it. Now let's talk about multifamilies. I'm talking about 4, 3, or 2 unit buildings, all the way from quadplexes to duplexes. And you can actually use the income from the other units that you're not occupying as rental income. Big downside of this is that you can only use 75% of the total number given to you from each unit. So let's say you're buying a triplex and you're occupying 1 unit and the other 2 units can rent out for $1,000. Lender can only use $750 towards that amount. And if you're going FHA, they can only use a certain amount of maximum appraised rental income towards your income itself. And another rule about FHA I want to talk about specifically is the self-sufficiency test. The self-sufficiency test basically is, hey, let's say I'm buying a 4-unit property. The mortgage payment is going to be $4,000. I'm occupying 1 of the units. I'm renting out the other 3. After removing the vacancy factor from calculating how much rental income there is from the appraiser, it must cover the proposed mortgage payment. So let's say the mortgage payment was $4,000 for a quadplex, and you were occupying 1 unit, so you can only use the rental income from the other 3. After taking out 25% for vacancy factor, The number of total rent that you receive from those 3 units must cover the proposed mortgage payment. If it does not, it will not work FHA. The only solution from there is putting down more money in order to offset how much the mortgage payment actually is, or getting a lower interest rate, or a combination of those two. So it is possible to get it done, and I highly suggest if you have the ability to do this, it's not a bad move, because rental properties are a generational investment. Now, there are other rules when it comes to getting a multifamily, but to keep this video a little bit more shorter and sweeter, this is the main things that you should be focusing on. Now, I want to talk about single family properties that have an accessory unit inside of them. Let's define exactly what an ADU is. Accessory dwelling unit. It's an apartment within a single family home. That's all you need to know. It's a rentable part of the house that is separate from the actual house, even though it's attached. Or it could be detached. Now let's define what the rules are for this. It has to have 2 separate entrances. It also has to have a kitchen, bathroom, bedroom, and a closet. And the kitchen has to have a stove in it. An appraiser will come in, they'll take a look at the rental income. This is going to be very similar to the steps when we're talking about multifamily. You can only use 75% of the total rent that the appraiser says. Same thing as a multifamily. Let's take a look at the rules when it comes to an ADU when you're using FHA. Rule number 1, you have to have 2 months reserves in your bank account after closing costs, and the rest of the down payment are sufficed. What does that mean? Let's say that your mortgage payment's $2,000. After you pay for your closing costs and after you pay for the rest of the down payment, if you didn't pay all of it up front, you have to have $4,000 remaining in your bank account, and you have to be able to show that. That's all reserves are. Rule number 2, you can only use a certain amount of money from the ADU itself in order to qualify. It's based off your income, and your lender will go over that because I can't tell you that because I don't know how much income you make. Make sure that you go over this with your real estate agent and let your lender know if you want to find a property that has an ADU in it. Now, going over multifamilies, condos, co-ops, single families with apartments in it, I hope that you walked out of this video a little smarter than you did and a little bit more knowledgeable about the home buying process. If you have any questions, leave them down in the comments. Again, my name is Hunter. If you are looking for a loan officer to work with, my information and my emails over here. At the end, you'll also see all of my disclosure information about where I work, etc., etc. And with that being said, make sure you like, subscribe, and let me know if you have any questions. Would love to answer them, and I'll see you in the next one.